Good night, Jermaine. Thanks for having me.
Yeah, man, thank you for accepting our invitation. So, what did you think of the discussion you saw Andre and myself having?
No, it's was a good discussion. I really learned a lot. Looking at some of the stocks, even some of the companies you mentioned, I haven't thought about them in a while, and hearing you guys talking about them, like even Dolphin Cove, I was like, oh yeah, that's a company we could take a look at. So it was a really informative segment in terms of providing information to the investors.
All right, cool, thanks. So I'll explain to everyone, why I asked you to join. So as a part of our new Stocks to Watch format, I wanted to hear from a CEO of one of the companies that's on the market that we talk about all the time. Hear your perspective on what's going on in terms of the market itself, the economy, movement of interest rates, etc. Just kind of get your perspective as a CEO of a company that's trying to provide value to its shareholders on our local market. So I'm going to give you the floor for you to kind of talk about what you're seeing, and then when you come back, we'll talk about just a little bit of what's going on with MFS right now. So I'll hand over to you, and we'll speak soon.
All right. So, as I said, thanks for having me again, Jermaine. I think, as most investors would know, and the beast that is really driving a lot of decision right now in terms of the investing market, not just the investing market, but most economies around the world, actions being taken by either the government or central banks. The issue that everyone is tackling is inflation and how it is that they are going to deal with inflation. We have been seeing it locally. We have been seeing it in most of the larger economies, the United States, for example. That has been their number one issue that they have been tackling for the past year and a half. We all know how this problem came about. COVID-19 would have ravaged a lot of countries, and the solution, or the what was pursued in terms of combating the impact of COVID and the impact it was having on economies, was to actually pump a lot of liquidity into the system to actually stimulate economic activity in these countries. And that would have pushed inflation. So the main tool that is currently being used to combat inflation is interest rates. Now, a lot of what has been happening apart from the impact that interest rate has on the wider economy in terms of our ability to borrow, it also will definitely have an impact on our stock markets. Most stock markets would be impacted because as an investor, if your risk-free rate or the rate on fixed income instruments are at a certain level, then investors will look at the fixed income investments and kind of stay away from the riskier and more volatile stock market. So we have been seeing it a lot in our local stock market. A lot of investors have kind of moved out of stocks and would have moved into the fixed income space. Earlier this year, you had low risk instruments such as Bank of Jamaica CDs, 30-day CDs, which were at trading at 10%. So that will kind of give you an idea of where interest rate and attractive fixed income instruments are, and why you would have the kind of impact on the stock market. And also the Jamaican stock market has done phenomenally well over the past couple of years. So we have been spoiled. But the flip side is that when we have done so well over a 6-7 year period, when there's a correction, we'll also have one of the greatest correction. So the correction that we're seeing now in the stock market is as a result of the high interest rates that are out there, the fact that investors would view fixed income instrument as attractive and safer than stocks at the moment. So it's a thing where investors who have been spoiled, especially retail investors, will have to start viewing our stock market now in the lens of what true equity investments should be. True equity investments are not normally short-term investments as we have become used to. We have become used to an environment where if an IPO comes out, for example, persons are almost guaranteed 30 to 50%, sometimes 100% within weeks, sometimes days. We have to view equity investments through a different lens. It is a more long-term strategy. It's a strategy where we have to be careful in terms of picking up. Maybe one of the strategies that could be employed would be invested in some fixed income instruments and using your coupon payments to build a long-term stock portfolio. What I can say is that investors will start seeing the benefit, I believe, within a 12 to 18 month period. Because we don't expect that the interest rate environment, the inflationary environment, will persist forever. We expect that over time, you'll start seeing interest rates coming off, and you'll start seeing persons moving back into risky investments such as stocks. In fact, both Bank of Jamaica and the Federal Reserve, I think, both paused in terms of their interest rate movements over the past couple cycles. So we have already seen where they have moved from a situation where every rate cycle they were increasing interest rate to now an environment where they have paused and are observing. That is not to say that they might not return to increasing interest rates in the future if inflation continues to be very aggressive. But it's encouraging that they have paused. It's encouraging also that the inflation in terms of Jamaica has kind of come back. It's still not within the range that the Ministry of Finance or the central bank expects it to be. It's not in the range of the target for the central bank, but it's getting close to there. And we can expect that if we reach a stage where inflation is within like a 4% band, that you will start seeing interest rates coming off for locally, and you start seeing a robust activity in our stock market again. I'll also speak a little bit in terms of the FX rate. I don't know how many persons online actually follows that, but a lot of the inflation that Jamaica sees is imported. Oil and a lot of what we consume we import those. So the inflation, the imported inflation, will actually be worse if there's also movement in the exchange rate. And we have seen movement in the exchange rate over the past couple of years. Over the past year in particular, we have seen a situation where the dollar was ranging between 152 and 155. That range has now moved up, and we would think it's more, the range now appears to be more 154 to 156. However, we have also seen where the central bank has been very aggressive in terms of trying to combat movement in the exchange rate. So the intervention, or the level of intervention during the course of this year by the central bank, they have been very aggressive. They have been very consistent and constant. So I think we can be very happy that in terms of tackling and fighting inflation, exchange rate, trying to ensure that it doesn't get out of hand for the most vulnerable in society, that the central bank has been working really hard on that. I mean, in terms of how I already said how I would look at investing in this environment is, a more rebalancing of our portfolio, of your portfolio. The fixed income investments are really attractive now. They're safer than stocks, but of course, stock is still the best long-term return and the best that will generate wealth for investors in the long term. So you have to look at the stock section of your portfolio as a long-term investment play, and look at the fixed income section of your portfolio as the section that will now give you steady cash flow, steady return, and this cash flow can be looked at in terms of putting it into stocks. So, for example, today I looked at the German 2025 the US dollar global bond from the government of Jamaica, and congrats to the government. There, we were just upgraded. So, this instrument, the GOJ instruments, are just slightly below investment grade right now, right? So, trending in the right direction. And the German 2025 US dollar global bonds were giving you 5.5%, which is really good because this is a 2-year instrument. It's US dollar, hard currency, 5.5% for a pretty attractive instrument that is now going to mature in 2 years. And if you're looking at a timeline that you think that inflation will start to come down and you can go back into stock, this instrument will mature just around about that time or a little bit beyond the timeline that we're talking about. So that would be a really attractive instrument to go into instead of a US dollar savings account or a repo or whatever else is out there. Getting 5.5% steady interest payment over a 2-year period on a highly rated debt instrument is pretty attractive. So those are some of the instruments that investors can look at. In terms of stocks, I mean, the two that I would add to what you guys mentioned, I love Scotia Group. Scotia Group, financial sector stocks normally do really well in an interest rate environment. Of the ones that are there, Scotia and NCB are the two largest financial institutions in Jamaica. No, a lot of persons will be staying away from NCB at this time because of the uncertainty and disruption. So I guess after that settles, you can look at that. But in terms of Scotia, strong dividend paying stock, which I know Jermaine loves, and also a stock that should do very well in this environment. Scotiabank cost of funds is always low, a lot of cheap deposits. Their loan book, they have grown it over the past couple of years. And financial institution, when interest rates are moving up, they will lag on the interest and moving up the interest on the deposit side, but they will immediately move up the interest on the loan side or on the debt side. So therefore, their spread on their loan portfolio will increase in this environment. Plus, they have always had and still do have a really low non-performing portfolio in terms of their loan book. I also love Grace Kennedy because it's a conglomerate, it's diversified. I think they have really strong companies in the group. I think they have products that will do well even if the country goes into a recession. So those are my two. That's my contribution. If there are any questions about anything else to do with the economy or anything else that I can answer, I'll try my best to answer.
Okay. Thank you for that, Dino. I wasn't expecting a stock pick, but I like that. Thanks for contributing there. Interestingly enough, I thought about what you said in terms of financial companies performing well in this environment. I guess at this stage, we're waiting to see, because really the market is not seeing it the same way, right? They're not responding in the same way. NCB is interesting, definitely. I remember a few months ago when you visited our monthly meeting, you spoke about NCB. I think that dividend announcement is very interesting. I don't know if that is practical for December 2023, but we will see. But I mean, I do agree with Hakeem that NCB is at a discount, but I think with all the things that are happening, then we have to give NCB some time, meaning a lot of things are happening. But I do want to thank you for that portion, Dino. We do have, I promised that we'd ask you 3 questions, MFS. So let me kind of sift through and say the 3 ones that we can get through. So first thing that I'll ask you, right, is, so we would have gotten some context from you in terms of, how you came to list on the stock exchange. For the benefit of those who may not have understood that process, and I hope you don't count this as a question, I'll just ask you to give us just a high-level overview of how you came into listing on the stock exchange. And then my first question after you explain that is, where are you in terms of plans to grow the company, right? Because acquisitions would have been mentioned, etc. So my first question is, what's the status on that? So over to you.
So we basically acquired a company that was already listed. It was basically, I mean, I don't know if I need to go into details in terms of the company and what it used to do, because it's the research is there. So we acquired a company that was already listed. We have restructured the company. We have changed the strategy of the company. We have renamed and rebranded the company. And that's how we came to be listed. What was the second question?
Second question is, where are you in terms, so you would have outlined your plans in terms of going into this year when we did our interview, plans for acquisition, just executing your growth plans, etc. Where are you with that? As in, essentially, what's happening with MFS right now as we're speaking?
All right, so we have, in terms of where we are, we have completed all the steps necessary to conclude our first acquisition. There are items that were outside of our control, and that's why it took a little longer than we expected. I think in terms of where we are, that one item that was outside of our control, we have had the dialogue and we're clear now as to what we need to do in terms of dealing with the item, and therefore you should see the announcement in terms of completion in short order. We also have, as we said then, other acquisitions that we have lined up that will move to immediately after the completion. And I feel that my investors, my shareholders, my stakeholders will be extremely happy when they see our new consolidated balance sheet, what it looks like. We think it's a really strong, attractive company that will be presented. So it's just to get to that point to be able to present it to the market.
All right, great. Thank you for that. I'm interested to learn more when the formal announcements are made and everything. I'm sure we'll be able to get you for an interview then. Another question based on the annual report that was published recently on a few, I don't remember when exactly it was published, but the question is asked there, and it was asked in our group as well. From the audited financials, the company, it was listed by the auditor that it may be in doubt as a going concern. What are the immediate plans to have this rectified?
Well, I think, well, to take a look at that statement, the statement would have to be made. The company we acquired really had has never made a profit from it was listed or created. And therefore the company would have had a lot of accumulated losses on the balance sheet. In fact, we found that also to be a selling point for us in terms of our strategy to do the acquisition to start with. Why? Because the company was already listed for over 10 years, and therefore the junior market benefits would have run out, right? So when we looked at it and looked at the accumulated deficit, we thought that this is good in terms of us being able to offset future profits against the accumulated deficit, and therefore it will be an attractive tax play for the company going forward, now that we have returned to profitability as our financials will reflect this year. Because even without completing the acquisition or putting the acquisition on our consolidated balance sheet, the company was profitable. The company was a really positive year in terms of our activity. So in terms of answering that, the consolidated, the financials with the accumulated losses and the deficit would have therefore shown a position where the capital of the company would have been eroded in previous years. The auditors would qualify a statement like that. Our new balance sheet with our new consolidated balance sheet will show a strong company, a company that is no longer in deficit in terms of our capital position, and that therefore that issue will be fixed as soon as you see the consolidated balance sheet.
All right, cool. So you're saying that pretty much the auditors are commenting on the previous company, the one that you would have acquired.
Because it's not a new statement.
Yeah,
it's a statement they put there. It's a statement that if you look at any other company that has accumulated deficit over years and its capital has been eroded, you will see that. But it's a benefit for a new investor.
Strategic opportunity for you.
Right, it is.
Okay, makes sense. All right. So in terms of, I have one more question, right? So in terms of your future plans for growth, what does that mean in terms of your need for capital? Does the company need capital to execute its growth plans for the next 12 months? If the answer is yes, then what options are you looking at?
All right, so the company doesn't need capital for the next 12 months. The new balance sheet will show that the company is capitalized. But that's not to say that if we have other acquisitions which will require more money for, that we would not, in that kind of environment, need capital or need to raise money. Could be debt, could be equity, it could be whatever. But as it stands now, we don't need any money to operate the business for the next 12 months or even beyond that.
Interesting. Can't wait to see. When is the next report due?
January, I think. Well, the quarter ends December 31st, so whenever after.
Okay. Yes, because we're in the final quarter. Okay, so question 3A. We don't reach question 4A. 3A. Philip is asking, will the reasons that caused the delays previously recur for subsequent acquisition?
If it is no, I'd say no. And here's the reason why I'd say no. When you do an acquisition that involves regulators, or whatever the case may be, you learn, right? And therefore, if you're doing an acquisition of even a similar company going in the future, you will know exactly what to do in order to make it quicker, easier, and smoother. So I don't think that scenario will happen again. And also, if it's an unregulated company, then there's nothing to be concerned about. But I think we have learned in terms of how we go about doing these things, what we need to do in terms of the communication you have back and forth with your regulators, what to do, even from a perspective of what is the background work that you do before announcing the acquisition, so that it doesn't seem like you're taking too long after announcement. So, going forward, we'll ensure that whatever background work we need to do, whatever communications we need to have, whatever no objection we need to have is done. So you won't have this kind of long drawn out process. It's something that we're not happy about, but we'll move forward, and we think we'll move forward much in terms of being much better in the future when we're dealing with these kind of things.
Okay, and I mean, I would imagine, I've never actually, acquired a company myself, but I imagine that each may be slightly different as well, meaning the steps may be similar, but each may bring, I guess, it's different nuances to the table that can either make things occur faster based on lessons learned, or may lengthen it just because there's maybe a different layer of complexity there. Right?
Yeah, that's true. And it depends also on, sometimes it depends on what the company that you're acquiring has in front of it and what you need to do. So you might need to say, well, we need to complete the audit for this period before you can proceed. You need to get a independent valuation. And, I mean, I'm kind of telling you some of the steps that we have done and that we have already completed. But, these are just some of the things that we do. But in terms of how we look at what we are doing and where we're going, we're not trying to overhype anything. We think that our results, our performance over the next 12 months will speak for itself. And therefore, we think that our investors will see the results, in terms of the movement, even in our share prices over that period.
Okay, cool. Thank you so much, Dino. I do see other questions for you, but I want to keep my word in terms of how.
I mean, I have one more if it's an easy one.
Well, I don't know if it's easy per se, but Matthew Preston is asking if MFS was to do an equity raise, would you be against dilution? I don't know if you can. I mean, equity raise, I think both come with dilution, right? But I don't know if he's asking something specific here.
I mean, no. I mean, I guess no shareholder, if you believe in your company, wants to be diluted too much this early. Because, if you believe that in a 24 to 36 months, this is what is possible, you don't want to get diluted too early, because you'll be diluted at the I'm not really afraid of dilution, because I am, I'm confident in the fact that, a smaller slice of a bigger pie is better than a big slice of a small pie. So dilution is not really an issue that I sit and lose sleep over.
Okay. So I guess answering his question, if you're against it, it would be no, pretty much.
No, I'm not against it.
Jamaican investor is asking, you said you're fully capitalized, but one of the basis for the qualified opinion is that the auditors don't see it that way. Hence the wording continued financial support is needed. But I guess you would have addressed that in terms of saying the balance sheet as it has right now and the next one that we're going to see will show a difference from what the auditors would have seen for the basis of their previous assessment.
Yes. So, I mean, I've already answered that question in terms of the capital of the company. The company, prior to us, the company never made a profit. In fact, you know, persons will look at what was there in the last financial year before MFS and, you know, say, oh, but that was a profit. No, it was book profits in terms of the previous shareholder writing off some receivables and so on. So in this year, you know, if you take a deep dive in our financials and so on, you will see that, you know, we made actual revenues from actual economic activity in the company. In fact, if you look even deeper, you will realize also that a lot of what is being reflected in terms of a negative light is based on the two subsidiaries that the previous owners had acquired, which would be Bar Central and Muse. So, you know, if you take a deeper dive in the financials, you realize that most of those losses and so on are attributable to those two companies, which we basically have indicated in previous announcement that we're looking at ways that, you know, we can move away from those companies. You can't just kick them off the balance sheet for now. There has to be a plan as to how you move beyond that. But what we're saying also is that our new consolidated balance sheet will reflect the strength of the company, and then our investors and analysts and Twitters and Facebooks and so on can look at the new consolidated balance sheet, which we have even discussed, even though it's still not reflected in the listed company, and it will be. We have discussed publishing it beforehand if necessary. We have not made a decision on that yet, but we're confident and happy that in what the new consolidated balance sheet will look like, and therefore investors will see that and have the opportunity to be happy or not happy, depending on how they view it, but they will get that opportunity.
So I think I understand why Jamaican investor is, kind of asking this question, why Cashrain would have asked it before. No doubt you'd have certainly heard about the suspension of, you know, iCreate on the stock exchange. It's the first time I've ever seen so many persons interested in the governance of companies that are listed, right? Usually persons care about the stock price, maybe profitability, maybe dividends, etc. But persons are actually interested now in the long-term viability of a company, which I think is a good thing, right? But I know one of the things always stressed here is that governance
it's a really important aspect of the company. I think, you know, investors will not have the opportunity all the time to be able to pull the curtain and look behind what's happening in companies. So that's why one of the things, and even analysts, most of the time, they're basically just looking at the raw numbers and making their decisions or their recommendation based on the raw numbers that are there. So that's one of the reasons why I've always been willing to open up myself to questions or to, you know, sit in any forum and to have a conversation. Or AGM, as you know, will be in short order, and that's another opportunity for investors to come and talk and ask the questions that they need to ask. And you know, the overall approach that I have is that my role is the CEO. I generate, I work on generating the revenues and so on. We have a very strong COO who work in terms of ensuring that our controls are there. Can look at his credentials in terms of where he has been. So we are not overnight sensations. We're not here to try and make a quick buck. We're persons who have done this, and we continue to ensure that we are working in a way to ensure that whatever we're doing can stand up to scrutiny.
All right, good stuff. And actually, as I said, I did mention in the group that you're always available, and I can definitely attest to that. You are one of the most responsive CEOs that we've ever had, do an interview with, etc. Just to remind persons, your AGM is on the 29th of November at 10 a.m. It says virtually here, and instructions will follow. So I figure you'll have, details sent out to shareholders closer to the date.
I think we'll update that to ensuring that it's hybrid, because we had some investors some shareholders who were really upset last year. So we want to ensure that we have a hybrid format where those persons who really want to come will be able to come. So it will be a hybrid AGM.
Sounds good. Thank you so much, Dino. You gave me more than I asked for in terms of time. Greatly appreciated. Thank you so much.
Thank you very much for having me.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at Learn, Grow, Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.